Hey traders, this is Asym Trading coming to you with another live Q&A session. I'm here today with Facundo. Welcome, Facundo.
Hi. Thanks for having me.
Yeah, so if you just want to quickly maybe introduce yourself, maybe where you're from, and just a quick background of maybe your trading and maybe some of the things that you think you might want to talk about today.
Yeah, sure. I'm from Argentina, but in the last few years, I've been moving around quite a lot. Right now, I'm living in Spain. Um, in around 2017, I started investing more like a kind of a long-term holding, some like the indexes, maybe some stocks. Pretty passive. I wasn't very involved in trading or didn't know much about it. And when the pandemic hit, um, I just couldn't do my job and I was at home.
Okay.
And like, I guess many of people are around that time, like I just saw that people were making a lot of money trading, I guess, and I got a bit more interested and I just also had a lot of spare time. So I got more involved in learning about active trading and more like swing trading. Um, so on my first year, uh, I did really well, but my risk management was a disaster. Like I didn't. My whole trading was kind of a disaster. It's just that the market was so good that, yeah, it was hard to lose money.
Your first year was 2020?
So yeah, it was my first year when I was like actively trading. Before I just
Okay.
bought some stocks and I also bought some Bitcoin before, like in 2017, 18. But it was more like a buy and hold thing, and I really didn't know much what I was doing. Uh, so yeah, it was more like a trial and yeah, not so big size also. So yeah, 2020 was my first year where I was actually actively involved and really trading. So yeah, I did really well, but honestly, it was just luck and the right environment. And the problem with that was that when things stopped being so easy, I already had like a big ego and like I thought that I knew what I was doing, but I
Yeah.
really didn't. So I gave back a lot of all my gains from the previous year. And that's when I kind of realized that I needed to uh, just like professionalize my process a bit more. And like, yeah, I started studying really hard and also just changed everything about what I was doing to manage risk better, basically.
No, I
Yeah.
think I think what you described is a
Uh,
common occurrence. I think a lot of people maybe they start trading whenever things are in a good period, and making money doesn't seem that hard. And like you kind of described, you kind of get an ego and think that you know what you're doing, and then the market environment changes, and then you quickly kind of realize, oh crap, like this is not as easy as I thought. That's really quick.
yeah, yeah. Like I was really lucky with it, but sometimes I think like it would have been better if I started in a bad period. So because it was really like it was difficult for me, and it took some time to accept that I really didn't know anything, and I had to learn, and that what happened before was just kind of the right environment and not me.
Well, yeah, I mean,
So yeah.
I kind of started trading in the opposite environment where like it was almost like a 3-year bear market from 2000 to 2003. Like that's when I kind of started. So there's
Mm.
there's also negative aspects to that, is where it's really hard to get confidence and get a good strategy, because like it seems like no matter what you do, you just like lose money. So I spent my first couple of years were extremely stressful, and obviously the outcomes were not very good just because it was a 3-year bear market. So yeah, like that is a good point of
Yeah.
depending on when you start, it kind of conditions you in certain ways to, either be overconfident or to kind of like lack confidence, just because it's so hard to make progress or make traction. And I think that's one of the reasons I kind of system hopped so many times in the beginning because like it's like no matter what I tried, it just didn't work, because it was just the period that I was in, it was just not very great
Mhm.
for, long side trading.
Ye- Yeah, yeah. I get that. Yeah, yeah. I guess it really conditions you in one way or the other, and then you just need to work to overcome your first impressions and experiences with trading. So yeah, after some time, I started to to get a better grasp of what swing trading is about, and I started to kind of try to develop an edge, and and I found that what works for me better, or what I had better results with, is trading gap ups,
Okay.
EPs, or yeah. Um, So I do that a bit my own way. I kind of develop my own entry tactic around it because I tried a few others, but I don't know, I didn't have so much success. And I did a deep dive on them and tried to, yeah, learn and study basically big gaps from the past years and try to find a way to trade them. And I found one that works pretty well for me. But I think my problem right now is that I don't have such a big turnover.
I
It's
see.
like my entry criteria is a bit narrow. So I get a high win rate, I get a good risk reward, but I just don't find as many setups as I would like to really like. mm,
Yeah.
yeah, to make more money and to take advantage of the best periods, like to be fully invested. It's a little hard for me to put all my capital to work at the same time because I don't find enough setups for it.
No, I mean, I think what you talk about
uh,
is a very common issue. The balance between turnover and, using your capital effectively, and how do you balance that with periods of time when, maybe your particular setup isn't very prolific. Because that's another challenge I think people face is when their setup that they know works doesn't show up as often. They kind of go looking for action in other
yeah.
places, and sometimes I've found myself doing that recently. The large and small caps. I mean, sorry, the mid and small caps haven't been doing so great, and that's usually where I normally do most of my
Hmm.
trading. So I kind of went off looking for shiny objects and trying to like uh, do things that like it's not something that I necessarily studied and back tested and I was confident with, but it was more of, oh, like I'm trying to get my capital and put it to work, but it's kind of has the negative effect sometimes where like you actually are doing more damage than good by continuing to grind whenever maybe you should be sitting on your hands. But yeah, that's definitely an interesting perspective you have as far as you have a method, it seems that works and it's effective for you. It has a good expectancy profile and things like that. But maybe the turnover is not as high as you would like it to be to use your capital effectively.
Yeah, yeah, exactly. I mean, it was a journey to get to that. Like before, um, I tried different setups and like I was trying to trade a lot more. But I think I had a period where my situational awareness wasn't that good. So and my progressive exposure wasn't very good as well. So I was maybe trading sometimes in the wrong moment and also sizing too big in the wrong moments. So then I kind of had this how do you call it, the boom and bust trader
Yeah.
period for a while when I was making like big gains in the right time but giving it all back because I just didn't stop trading or just didn't size down when things weren't so good for me. And then I just took a pause, did this deep dive on gap ups, and made some work on trying to figure out how to trade them. Um, And then I went back to trading and trading just this one setup that I had been working on.
Yeah.
The results were good, were a lot better. But yeah, I encountered this new problem that is that I don't have enough turnover. So I don't know now if I should just try to trade some other setups, or maybe I should adjust a little my entry criteria to try to incorporate some other stocks that I could trade that I'm not that don't exactly fit my criteria right now. Or yeah, I also encounter this kind of frustration with the big caps moving and the indexes moving up, and the stocks that I usually trade that are more like a mid and small caps, not doing that much.
So I mean, do you
Yes.
think
So
most of
yeah.
your gap trading is kind of in line with earnings periods and things like that? Like, are you normally trading episodic pivots based on earnings reports and such?
I would say most of them are connected with earnings, but sometimes they are just news. Some
Okay.
news. I scan every day in pre-market for what's gapping up, and then I kind of sort it by. Yeah, I watch some different things, like the pre-market action is really big for me, how the pre-market action looks. And then if it's trading around some levels on the chart that I mark, like resistance, support levels, or some, yeah.
Okay.
And I look for an entry. Sometimes, um, yeah, so the good thing about that is that the first day or first few days, it's not very correlated to the market when you have a big gap in general, at least the ones that work well. So I just know that if I want to leave I usually take partials pretty fast. And I know that if I want to leave a part for like a runner for swing trading, for trying to catch a bigger move, I just need to have the right the right background, right? Like the market in an uptrend, because after the first few days, it starts to be a lot more correlated with the market.
Right. Yeah.
That's what I found out.
No, that's very
So when the
true.
market is like not in a good moment, I'm just taking buying the gap, but taking my profits fast. And when the market is in an uptrend, I'm just trying to leave a part for catching a bigger move.
No, I think that's a really great observation of like sometimes the gap is not correlated with the market, but then at some point shortly after the gap, like it starts to correlate a lot closer to the market. And if the market is good, then it'll follow through quicker and faster. And if the market isn't very good, then it kind of either gets stuck where it's at or it kind of falls apart after the gap. That's a really great observation. So
Yeah,
is it
yeah, thanks.
yeah? So I was just is there anything specific that so it sounds like you're looking for perhaps are you looking for another kind of setup to trade outside of the gaps?
Yeah, well, now I'm trying to understand if I should incorporate some other setups. I like a lot, and I use the Oliver Curls cycle.
Oh yeah.
Yeah, I track I use that cycle to track stocks and the indexes, everything. I like that a lot. And I was buying before kind of wedge pops, kind like descending channels or descending wedges, and try to catch like that wedge pop when it breaks structure with to the upside. So I had kind of mixed results with that. I mean, maybe it's just because my situational awareness wasn't so good before, and I was maybe over trading a bit in the wrong moments. But I don't know. I'm just thinking if I should incorporate that again to my trading, or maybe if, for example, if I should try to buy gap ups on stocks with a higher ADR and a little like lower price stocks, because I don't really buy stocks below 3
Mm-hmm.
I have that as a in my scans, in my screens. So I was always a little adverse about the high ADR stocks because I don't know. I just felt like they make such they are so volatile that it would be hard to put a small stop loss, or that
Yeah.
I could just get stopped in just intraday volatility. So I was always a little skeptical. Like, yeah, I always avoided them. But I'm thinking if maybe I should try to investigate that a little and see if it works for me also to have some more options, find some more stocks to trade.
Yeah, I'm not sure if you saw this recent post that I made about volatility versus position size, but I think your particular concern. It sounds like maybe you historically trade things that are lower ADR. Is that what you're saying? Like, do you know what the average ADR
I
of your
guess.
stocks is?
Yeah, I mean, I try not to trade something that has less than 2.5 because I feel that's too slow.
Mm-hmm.
And the highest would be around, I think, 8 or 7. Uh, but I usually don't trade something that is like 12, 15, 20 ADR because I feel like it's a bit insane. I don't know.
Yeah, and I think this chart,
Uh,
of these high momentum stocks is kind of a good indication of, like, there's probably in this middle zone there's a lot of a lot of this is a good balance between the ADR and kind of like the position sizing down here. Do you know what, like, do you have an average, like, risk per trade? Do you use a certain percentage of your portfolio, like 1% or 0.5% or 1/4% of risk per trade?
yeah. So it depends a bit, but I would put between a quarter and 1%. Like one, it would be like 0.25. Usually, it's like half a percentage. Yeah, half percent. And in really good periods, if I'm really confident or something, I would put 1. But it's not my usual. So, yeah,
But I mean,
the
I
usual
guess
risk that I take.
if you're trading let's say you're trading this pool of stocks. I mean, how much of your portfolio are you sticking in that stock? Let's say you do find a stock that meets your criteria.
Oh,
Like, what percentage of
yeah,
your
my
portfolio?
positions generally are around like 25% of my portfolio. Yeah, sometimes less, sometimes a bit more.
Okay.
Yeah, sometimes it would be like 15 or 12.5% of my portfolio, but I try not to that it's not smaller than that.
But you have a cap on the high side, like you won't put more than 25% or like 30% of your account in one trade, or do you have an upper limit?
Well, if it's one of this setup that I'm trading right now, I would allow myself to put more, but just because I'm taking partials fast when it works, of course.
Mm-hmm.
But yeah, I think I wouldn't take more than 50% of my account in one trade. I think that's my maximum. But I haven't done that yet. I just thinking about it. I never actually put 50% in one trade.
Yeah, I noticed Stockby had some post recently about where he would oversize positions initially and then kind of peel it off in the beginning. Is that something you've thought about doing?
I read about that, and I'm interested in doing that because I think that it could work well with what I'm doing. I'm just I don't know. I'm just I guess a bit scared of it because if the
Well,
trade
yeah.
doesn't work and I get stopped out, especially if it happens like a couple of times in a row, it feels like I would. It's easy to get a big drawdown.
No, that's
So you
true.
need to be really, yeah,
I think
really
that's the
confident
slippery
in what
slope.
you're doing.
I think there's a slippery slope with oversizing because, like, yeah, like you can get bigger winners on the upside, but you also you end up with bigger losers as well. So that's a really good point you make. Oversizing, it sounds great in theory, when you only think about the reward side, but like you're also increasing your risk at the same time. So that definitely is something to consider.
Yeah, well, in fact, I was telling you about like maybe trading higher ADR stocks or another setup, but another thing that I could do is actually size bigger. As you say, yeah, that's another option for me, I guess. Just keep the same setup and try to size bigger. At least if I'm sure that
Right.
that it's a good moment to trade, or if I had some like a cushion to start sizing bigger.
Because that's one of the challenges on this right side of the curve is it's using the same amount of risk. Like the higher the ADR, the less of your portfolio you can put per trade. So this is a challenge that I find myself in. You know, in many cases recently, where it's like I'm trading something with a 15 or 20% ADR, but like if I look at my normal 0.5% of risk, I might be only putting 5 or 10% of my equity in that one trade. So like my turnover can definitely be higher because of that, because I'm able to take more and more trades. But it's like, sometimes I don't have 5 or 10 different, trades going on at a time. So I find myself with large portions of cash kind of sitting there idle in some cases. So there's certainly trade-offs if you go on the right side of this curve, and then on the left side, if you go into really really low ADR stocks, you end up having to put a very very large portion of your equity, even like on margin, perhaps just to get the same level of 0.5% of risk. So I think this middle zone is probably a pretty good area. So yeah, that could be something you consider is to maybe size up, maybe slightly size up intraday
Mhm.
and
Yeah.
peel some of that off maybe by the end of the day. And like you kind of indicated, the only really other option is maybe you have a secondary setup that, and I think that's not abnormal because earnings season, when a lot of the episodic pivots happens, like that's kind of it comes in clusters. There's like these every 3 months or whatever. Like you have
Yeah.
this large group of earnings, and everybody's releasing their earnings reports around the same sort of time period. So like there's like this flurry of EPs that happen all within a kind of a few week span. And then in between those
Yeah.
those earning seasons, you kind of have this long drought of like, oh crap, okay, well, what else do I do now? There's, there might be some random news event that might happen periodically in between then, but like that, the number of setups that you get in between earnings season is kind of a lot lower. So maybe another thing you could consider is outside of those earnings windows, maybe you have a secondary setup like a flag setup, or like you talked about
Hmm.
Kale's cycle of price action. I think that's another great thing that can be used. If the market is great, maybe you can do EMA crossbacks, or maybe you can do the basin breaks or the wedge pops. Kind of depending on what's going on in the market.
Yeah. 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 That's true. I agree. I think also going back to what you were saying about the clusters, sometimes even inside earnings season, it happens that I get like 2 or 3 stocks that I could enter like on the same day at the same time during the open, and then
Hmm.
like maybe the next days I don't get anything that really fits my criteria or that I would like. Yeah, the that's a trade for me. So it's really hard sometimes just for me to put the size if I have or to enter all the stocks that my process says I should be entering because they are happening at the same time on the same day. So I just to maybe focus on one or two, but yeah, it's kind of a bit frustrating when you just let it go and and then you are not getting anything else on the next days or yeah or weeks.
No, that's true. And then kind
uh,
of the progressive exposure thing that you mentioned earlier, that maybe that's a little more challenging too. If you're getting 2 or 3 or 4 setups on the same day, it's like, okay, do I take all 3 or 4 of these? Which essentially,
yeah.
if you're using 30 or 40% of your capital per trade, like you might max out your capital in like a single day. And then it's like, okay, what if they don't follow through? And now you're having to take a drawdown. So yeah, that definitely would be
Yeah,
challenging.
exactly. That was a big challenge for me also. This is why I wasn't sizing that big. um, and yeah, it's something. It's a minus, I guess, of of the EPs or yeah or the gap ups. So I think maybe like a secondary setup would be good for me. In fact,
Well, and also another thing to consider is I'm not sure if you saw Marios's recent interview with Richard Moglen on Trader Lion, but um, if you
yeah, I did.
if you look at his monthly kind of distribution of his returns, he only had a couple of like really big months, and then he had some months that were flat or like slightly positive, and maybe it could just be the fact that maybe you understand conceptually. It's like, okay, there's going to be a couple times a year where I get most of my gains, and then everything between that is like, I'm just kind of treading water and trying not to do damage. And maybe that's another thing to consider is maybe your returns for the entire year it's based on you consistently and regularly compounding your gains throughout the year during those couple of windows, the the profits are going to be the best and your setups are going to be a little more prolific, and then you either do little or nothing in the meanwhile. And like I think if you do that, that'd be another great approach, is just to kind of keep in mind is like, okay, like I know every year there's only going to be maybe two or three times in the entire year where I'm going to make most of my gains, and then in the meanwhile I go golf or I go fishing or I do something different and kind of let the market do whatever it does in the meanwhile.
Yeah, yeah. Honestly, I'm trying to take that approach because before I was over trading. I was really trading all too much. Like in every period, I was trying to find a trade. And I think I read one of your tweets something that really stuck with me. It was about like the setups look the same, but you don't get the follow through during the bad periods.
Right.
So yeah, something like that. So I remember because I was finding setups even during bad periods. If you just really look a lot, you will find some.
Yeah.
but but I was buying them, and yeah, they just didn't get any follow through, and I was getting stopped all the time and giving back all my gains. So now I kind of went to the other extreme in the last months. That this was like I was trading too little. This is why I was worried about the turnover because I was sitting on my hands a lot. And then when I got these periods where things was working well, like the past November, December was a great period, and there was a lot of EPs.
Yeah.
I got some, of course, and I did make money, and it was good, but I could never put all my capital to work, and I feel like I sat on my hands before that, and when I had the good time, when it was the right time, I just couldn't really step on the gas. So I feel like my performance is not that good because I'm not able to really take the maximum advantage of the right time, even if I'm sitting out now on not favorable times.
Well, that's a really good point because if you're kind of overly active or over trading during the poor periods and you run into a string of losses or you have a drawdown, it kind of makes you apprehensive and gun shy a little bit. So that way, when the good period does return, you're a little apprehensive because you're still kind of licking your wounds from the drawdown from before. So I can totally see that. That's certainly a struggle of how do you balance sitting on your hands and not over trading, during poor periods, and that kind of maybe is the answer of trying to do less during poor periods or trade a lot smaller. That way the damage is minimal, and that way when the good periods are there, you kind of you have the confidence and the conviction to step on the gas a little bit. So I mean, it sounds like you have a lot of your processes mostly figured out. It doesn't sound like you're blowing up accounts, and it doesn't sound like you're just like doing major damage, which that's kind of half the battle in many ways. Yeah, I mean you're relatively new to trading in the grand scheme of things, and the fact that you're at this point, I think is pretty amazing. And that you're self-aware to kind of do the deep dives and study your results and kind of trying to figure out how to get better performance. I think it's great.
Well, thanks. It was, maybe it wasn't so long of a journey, and I still have a lot to do. But I feel like I did have a period where I was making a lot of damage. That it was like in 2021, 2022. Yeah, it wasn't that good. I guess in 2023 I kind of stabilized a bit. Yeah, stopped hurting myself so much. But 2021 was pretty bad for me, especially.
I mean, did you find that taking a like like is using a smaller kind of risk per trade, did that help you kind of feel a little more resilient? Because that's something that Marios talks about in his interview of being a little more resilient and being able to take some hits and without causing a big drawdown. Have you found that taking a smaller amount of risk per trade, is that helping you to be a little more resilient and have a little mental clarity when you kind of run into these rough periods?
Yeah, totally. I think the mistake that I was making before was that I was risking 1% of my account per trade and getting stopped out like 10 times in a row. It was insane.
Yeah.
So when I finally decided like to make a pause and reevaluate things and kind of study and go back later, I went back risking 0.25.
Yeah.
And that helped me a lot.
No, I mean
Yeah.
that's really good. Like you can see from this drawdown chart, when you start getting into the 20 to 30% batting average, like you're going to run into these series of 8, 9, 10. I think Goverdan in his interview talks about 17, a 17 loss streak. I don't know if I can mentally handle 17 losses. Once I start getting 7, 8, 9 losses in a row, I start to kind of like really dial back because it's like something's off. Either my trading is off or the market is off. But no, like at least you have some self awareness to be like, okay, like I need to reduce the damage because you're absolutely right. A lot of people think, oh, if I just trade 1% risk per trade, then that's gonna like save me, and it's like, no, it doesn't save you, especially if you get into a poor market period and you get these runs of losses where you're doing 5, 6, 7, 8, 9, 10 losses in a row. You can really cause a significant drawdown even just taking 1% risk. So I think that's absolutely true.
Yeah, but I did that. I did that. You absolutely can make big damage to your account with 1% risk per trade for sure. Yeah, I think what helped me the best to make a pause to study and then come back risking less and just growing from there. The risk. Yeah.
No, I think that's a really great
Adding.
perspective. Is like you're taking your process, like you're getting an outcome, and you're actually like refining what you're basically having your own feedback loop, which I think that's critical for traders to have. I mean, that's why I think your mentality and your perspective is really mature, even though you haven't been trading for very long. You're able to kind of reflect and take your own outcomes and try to improve your processes. I think it's great.
Okay. Yeah. Thanks. I think honestly, what helped me the most was doing the deep dives and a lot of analysis of my trades and trying to get a lot of numbers and kind of statistics because I wasn't very confident in myself after having such drawdowns. Uh, but I found that I could kind of trust the maths, kind of.
Right.
So I couldn't trust myself so much. But when I started like kind of studying and crunching the numbers and analyzing my numbers and kind of testing things and seeing like, oh, like this can work, like the number says it can work. And I just started to try that with less risk. And when I started seeing some results, I kind of regained my confidence
Yeah, that's
and
really
was
good.
able to come back to trading. Yeah.
So, I mean, is there anything specific that
Uh,
you want to ask me or talk to me about that you think might be helpful?
Maybe some psychological stuff. I still sometimes deal with some kind of, I guess, self-sabotage. I don't know. Sometimes I will take some trades that I know I shouldn't. still it's not as bad as before. It's more under control, and even if I make some mistake, I just don't lose so much. I
Yeah.
maybe realize fast or something, but
So
I still get sometimes this urge to put a trade that I know that I shouldn't.
So what do you think triggers that? Like, is there something that you're feeling as far as like you feel like you're not turning your capital over, or like there is it during a period of inactivity where you're like, oh man, I need to be doing something? Like, what do you feel like is triggering you to? Because I know for me personally, like
uh,
that's what kind of causes me to over trade or do things that are outside my plan. Is like when I hit a period of inactivity where like my normal setup just isn't really there. Um, I
mhm,
kind of call it like chasing shiny objects. I'll go and like I'll look for something that's outside my plan of like, oh, like I don't normally trade gaps, but like since my normal setup's not there, let me go look and see if I can trade gaps or try to do some pre-market stuff. And like that's when I start getting into this slippery slope of like taking trades that I shouldn't be taking. And obviously the outcomes are not what I want. Like I'm sitting there grinding away whatever progress I made before. Um, and having a drawdown that I shouldn't even have just because it's difficult to sit on your hands sometimes. Do you feel like that's what's kind of triggering you is when there's these periods where your setup is just not there?
yeah, yeah. I think it's the same thing. It's either like sometimes it's just seeing that, for example, in this last period, like some of these big caps are really performing, and me not getting so many setups, and I just want to kind of try to force something there, or just force a setup, or when I had some of these mistakes in November, December, when I had a good period, but yeah, I just wanted to turn over or just to put more capital to work, and I wasn't finding the setups, and I was maybe trying to force it. I just saw something that it didn't really fit my criteria 100%, but I just tried to kind of find a way to convince myself, like, well, maybe.
Yeah, yeah.
Maybe it will work.
So there's two
I
things that I
should give it
found
a
helpful.
shot.
There are two things I found helpful in that regard is Christian kind of talks about how overtrading is one of his biggest weaknesses. But I think he does a good job of like sizing down significantly during those periods of time. And maybe something you could do is uh, he calls it like satisfying the urge or kind of like getting a hit, almost like like a like an addict is they have to get a hit. But he does it with smaller size because he basically
Yeah.
in his mind if he does that with a smaller size, it kind of satisfies his urge, but he's not at the same time doing a bunch of damage to his account. So that may be one strategy is like when you feel like you're taking a trade that's probably not within your plan or it's not as optimal as you would like. Maybe you take it with half or a third of the size that you normally would. Um, another thing that I found helpful is
Mhm.
when I have urges to trade that is outside of the windows that I should be trading. Sometimes simulation accounts. If you have like a sim account, maybe you can put those trades
Mhm.
on in the sim account rather than in your real account. And if it causes damage, like you're not doing damage to your real account. You're just kind of maybe losing virtual money at that point. And I know it's not exactly the same psychologically because you know that it's a sim, but it may be another strategy to kind of take the edge off a little bit of like having the urge like, oh, I got to do something. But then like maybe you can see like
Uh,
if your virtual returns are kind of sucking, then it's like, okay, like I'm not losing real money, so thank God.
yeah, I didn't think about that before. I think I will give it a try because I was recently going through some trades that I made, and I made a note in one of them that it said like, if you are sizing it smaller, should you really be taking it? Because
Right,
I
right.
realized that it was one of those trades that didn't fit my criteria. I guess yeah, I was aware of it in the moment, but I wanted to take it anyways, and I sized it smaller, and it was a loss, even if it was a small loss. Then when I was going over it, I just thought like, I sized it smaller. Like, why even take it?
No,
Because
that's
I knew
actually
there was something wrong there.
no. I think that's a really really great perspective and takeaway. It's like if you're so lacking in confidence that you take a really small trade, then like that's a great point. Like why even take the trade at all? It's like, but then
Yeah.
like maybe maybe those smaller losses and smaller trades are necessary just to prevent doing bigger damage. But it's I don't know. Like Christian even talks about that.
Yeah.
Like you can't really fully get rid of the urge. It's kind of like this thing that just it's part of your personality or it's a part of a thing you have to deal with. So yeah, that's a really I don't know. That's a really great perspective. I think because I've thought the same thing when I
Yeah.
go back and look at my trade log and I'll see these kind of what I would categorize as impulse trades, trades that I shouldn't have taken, trades that are not part of my plan, but I took them anyway. And then you look back, it's almost like you're looking at this period of time where you have this manic, like crazy state, and you're like, why the heck would I even do that? Like it's completely outside of what's logical. Like what you should be doing, but in the moment, like you kind of these urges really sabotage your trading sometimes.
Yeah, yeah, totally, totally. I guess you're right in the sense that I guess it's impossible to really get fully to fully get rid of it. But yeah, damage control and try to find ways to mitigate it, I guess. The simulation account can be a good one also.
Yeah, no, awesome. I mean, is there anything else you wanted
Uh,
to discuss today?
mm,
I mean,
Yeah, I mean, I was a bit curious. I didn't really ask you too much about your process when trading higher ADR stocks. I know it has this minus that you can't put too much size on them, but I was just wondering maybe if you could go through that a bit.
yeah. So normally, I think I don't know if you've seen any of my recent videos or my Twitter posts, but I really a lot of times pay attention to the ADR percent in relation to the
Hmm.
Bollinger Band width. So in a lot of ways, I know I've really focused on super high ADR stocks, but like I think I've indicated recently, I'm kind of questioning my own biases. And that's based on my own studies recently of stuff like this. I'm living over here on
Hmm.
this end of the spectrum, but then I'm finding it difficult to like get my capital fully engaged. Especially even in some of the good markets, like I find myself only using 50%, 75% of my capital, and my turnover is relatively high. So, like
Hmm.
if I'm only putting 5 or 10%, that means I need 10 to 20 positions on just to fully engage. That's not even using margin. That's just using just a normal position size, and that's risking 1%. If I risk 0.5%, I'm using even less. So like I find
Hmm.
myself having a lot of difficulty engaging my capital fully, even when the market is decent. So I'm actually in myself reconsidering like, okay, like why not spend a little more time in this area here instead of like insisting that like most of my stuff be over here. So that's one thing that myself I'm trying to like grapple with just my own biases of like, why do I have this bias? And in some ways it's like maybe it's influences from Christian. I watch Christian's content a lot. I know he doesn't produce a lot of content anymore recently, but some of the things he talks about is like if he had to do it all over again, he basically says he would trade the highest ADR stocks with the highest momentum. It's like in his mind like that's the pool of stocks that's going to give you the greatest sort of risk reward at the end of the day. So like I tend to lean towards that super high ADR end of the spectrum, but in some ways it's not maybe optimal when it comes to capital deployment because it's at the end of the day like I'm not in some ways it's my own ability to or inability to size up because if I'm having to put 15, 20, 25% of my account in one of these sort of stocks, like my mentality is not there, my psychology is not there to handle a stock that's that crazy, with a 10 or 15 or 20% ADR, and I've got like a quarter of my account in it. That's that's just something right now. I'm just not there. Um, so I'm really thinking about leaning more towards this more moderate sort of ADR range. But a lot of what
Hmm.
I do is
Okay.
I run my normal scans. I've talked a lot about the 80 Express scan and the 80 Extender scan, but essentially what I do is I'm looking for these, and this is just kind of my process. Um, like these stocks here, where like the ADR is 9%, but the intraday Bollinger Band width is 22. Like and I know this is SMCI, it's been running, but like I already know before I even look at the chart, as soon as I click on it, it's not in any sort of compression area. It's extended above its most recent
Hmm.
compression, or maybe it's fallen apart. If I go to any of these, like if this is 8 and 13, I bet if I click on it, there's not going to be any sort of compression area there. It's just kind of this wide, loose, sloppy sort of area. So as I go down these stocks that are where the ADR is less than the Bollinger Band width, you can see like it's not offering any sort of good risk reward area. But if I go to these ones where this ADR is higher than this right number, the Bollinger Band width, this is a lot of times, and again, it's not always going to be exactly perfect, but it'll help me quickly identify the ones that have a lot of potential. The ones that are kind of, I'm looking for ones that are tracking sideways that have several days of just tight price action. So, if I go down the list and I just isolate these ones that have an ADR that's greater than its intraday Bollinger Band width, at least it's a good starting point. So it kind of helps me get rid of the ones that I know I don't want to look at because they're too sloppy and volatile at the moment, and it helps me isolate the
Hmm.
ones that are maybe a little bit higher potential that might give me that kind of compression look that I'm looking for on an intraday basis. Because that's usually my process of how I kind of take, and I don't necessarily care about the ADR specifically, more so than I care about the compression amount related to the ADR, if that makes sense.
Yeah, yeah, I get it. I get it. No, I guess the reason I'm interested in them is because, uh, well, of the potential to make a big move going out of those compression areas, maybe in 1 2 days, and being able to peel off fast. Because I guess the thing I like about this gap ups is that I'm able to take some partials pretty fast and to move my stop to break even when I take those partials pretty fast. So I'm de-risking the trade
Yeah.
pretty fast. Yeah. So I realized that for me that's a big plus compared to other trades that I was taking before. And I thought that maybe in high ADR stocks you get a similar situation in which if you can kind of put a decent size on it and take some of it fast, it could work in a similar way, maybe.
Yeah, and like this model that I kind of created here, this is just based on kind of my studies, and I've studied a lot of traders over the last 20 years, and I've looked at I've spent thousands of hours looking at charts and studying big winning moves and things like that, and I kind of came away with the
Hmm.
conclusion of like this is kind of a model that captures a lot of what these big winning stocks do. Because you'll have a gap or some sort of high volume expansion, and then
Hmm.
maybe before this was a long base. It was like a multi-month or multi-week base before this, and you either get a gap
Yeah.
breakout or you'll get this expansion bar breakout. And like to me, that's like the first action zone that you kind of get out of this long sort of basing area. If you imagine that this was
Yeah.
some sort of long base period here, um,
Hmm.
and then like uh, and you don't always get a day two follow through, but like you'll usually at some point after this gap you'll get some sort of like and again like you indicated, it really depends on what the market is doing at the time, how well it follows through. So like this isn't some rigidly defined model. This is just kind of like, okay, at some point after this expansion you're probably going to get a couple of days of pause after that, and um, so you might not ever get this day two follow through. But this is more. I don't know if you ever read Jeff Cooper's his swing trading book, Hit and Run Trading.
No, I haven't.
Yeah, so Jeff Cooper was a very popular swing trader. Back in the early 2000s. I think he's still around today. But he actually had one of his. He had a couple of core what he called his kind of bread and butter setups, and
Hmm.
there were five of them, and out of the five, two of them were based on buying the next day after a big expansion bar. Like he had what he called expansion breakouts, and then like he had a day two follow through that he used to kind of get in. So like I thought that was a really novel concept. He's one of the few people that I've actually studied that actually discussed that sort of concept as far as taking the day two follow through. So this piece here is kind of influenced from Jeff Cooper's hit and run trading, And then this pause area,
Hmm.
this is just based on my own observations of studying big stocks. Dr. Schaap with his AD Excellence book. This is basically this is an AD Express pattern. It's like a 2 to 5 day pause after some sort of upthrust. Sorry. And then the next sort of major
No
area you
problem.
get are these kind of wedges, flags, triangles, and this is where you get into like the Kulamagi sort of flag patterns. He talks
Hmm.
about 2 weeks to 2 months is kind of like the sweet spot of these flag bases. And this is no different than like a high tide flag, or there's a lot of folks that kind of describe a similar sort of setup in their own sort of ways. But it's like as I dissect lots of traders and swing trading strategies, um, and I just kind of look for like how are those strategies similar. This is kind of the model I came up with of like most traders that you look at have something similar that they're kind of looking for as far as where they enter in the kind of the action points in the stocks. So I don't know if like maybe one of these other, if you're looking for an alternate setup or an alternate strategy, like if one of these other sort of action points might be something you could explore as well.
Uh, yeah, yeah. In fact, it kind of looks like the like the crossback from Kel and the base and break also.
Yeah,
Uh,
yeah. This would be a basin
yeah, right.
break.
Yeah,
For all intents and purposes,
yeah.
that's a basin break.
Hmm.
And I can,
Yeah.
yeah. And this is
I
this is
I
what you're
have
talking
tried
about.
before the
So
yeah, right.
I love this
Yeah.
chart here because this is Kel's cycle of price action at the bottom, and I don't know if you've never
Mhm.
seen professional trading strategies. It's like a day trader's course, um, but like I basically took the main professional trading strategies core patterns, and I started to realize if you look at Kel's cycle of price action, they actually overlap like really really well. So I was able to kind of piece
Mm.
together these core patterns from professional trading strategies and realize like it actually lines up with Kale's price cycle very very well. This buy setup, that's one of the core patterns. It's an EMA crossback for all intents and purposes. And this flag, bull flag and wedge pattern, it's essentially a basin break. And then this exhaustion extension is what they call a parabolic sell. And if you kind of work your way the cycle the other way, so I thought it was really, really
Hmm.
interesting that these two completely separate traders, completely separate methodologies. One's day trading, one's swing trading. But if you look at how they analyze the market, it's like there's a significant amount of overlap there. I thought it was really cool actually. So that's why I have this picture in my profile because I'm like, man, like people that observe the market and study the market, they come away with really, really similar conclusions on price action and like how a price cycle unfolds. Even though they have completely different methodologies, they still have the same observations.
Yeah. It's a great chart, a graphic. I really like it. So yeah, there's a lot. It's really interesting what you say. Like really, even if people call it different names or just, in the end, it's all kind of the same. It all fits in there.
Because yeah, like this would be
Yeah.
like for AD excellence, this might be a AD express pattern, and this would be the AD extender pattern. And like Kale mentions that these basin breaks can happen over and over again all the way up, and the same thing with an AD extender and AD express. You can have multiple of the patterns on a single leg up. It
Hmm.
just depends on how long that run lasts. Sometimes a stock will run for just a few days. Sometimes it'll run for multiple weeks and months. It just depends on the stock.
Yeah. Okay. Yeah. Did you actually try or use the second day follow through entry tactic?
So that's a good question. I haven't done an extensive amount of study on it, but what I did find is like this immediate follow through doesn't happen as often as you would think. It's like a lot of times a
Yeah.
stock will have a big like day one move and then it just kind of rolls over and dies, or like it'll have a big day one pop and then this is what comes next and not this second day follow through. So like it's really, I don't know, it's kind of situational, almost like the gaps where it's like sometimes it happens and sometimes it doesn't, and like you have no control over whether it happens or not. But I mean, I've certainly seen cases where this sort of follow through is very powerful on the second day. So I mean, it could be
Mhm.
something that you could explore of maybe after a gap, you can look for some sort of day two expansion. Because I've certainly
Yeah,
seen this happen quite a bit, where like, especially if the stock closes near the highs, or maybe like the most of its movement happened in the first part of the day and the second part of the day, you can see on the hourly like it'll track sideways for a couple of hours, like from lunchtime to the end of the day,
mhm.
and then the next day it just kind of it follows through from that and just keeps on blasting higher on day two.
Yeah. Initially, when I was started trading pop-ups, I started trying to get in on the second day, and then I switched to the first day because I found, at least for me, I was missing out on a big part of the move, and many times it wouldn't follow through, or I just didn't have a good entry tactic for the second day. I was getting stopped out a lot,
Right.
or yeah. But recently on this um what's the name of this you before you mentioned an interview with one of the um, with Richard Moglen and this, I think he's Greek, Marios.
Yeah,
It's
Mario's. Yeah.
what's his name? Marios. Sorry, I couldn't remember his name. I watched that interview and he said something about trading on the second day after a gap up on biotechs. He said that he studied it and that it worked well for a second day entry many times. So I started to reconsider that also. And now when you bring it up, I don't know. It came back to my mind like it's something
Well,
else
and
to look
actually,
into.
SMCI is a really good example of like this kind of. It's the reason I have this model is like if you look at this model here, and you look at SMCI,
Hmm.
it's like you have this really powerful day one, and I know this was a gap, but this wasn't some like a lot of people look at gaps as a minimum of it has to be up 10% or something like that, but like there's a lot of gaps that are just kind of these mini gaps. It's just this kind of small. And actually, when it comes to gaps, I've had significantly more success with these mini gaps than I have these really large gaps that maybe it opens up here after being here the next day. But you can see SMCI has
Hmm.
a really powerful day one, and this is kind of like in this model. I love models because it helps explain things a little more simply. But this would be the same part of this cycle here, day one, and then and this is the challenge with trying to do day two is like there's not really, if you look on an intraday chart, there wasn't really a good way to get into this thing on day two unless you use some sort of pullback, or and then that's another strategy that's also viable is like sometimes you'll get these pullbacks intraday into the hourly 10 or 20 that forms these sort of shelves and
Hmm.
ranges, and those might be good places where you can buy breakouts of these intraday patterns, because at SMCI it's just been running, and there hasn't been a lot of places to get on. But this right here,
Yeah.
for like 80 Express, this is an 80 Express setup here where this green line pulls back. This is another one where it pulls back again. This is another one where it pulls back again. So like just in this one leg up here, it had one, two, three different 80 Express setups. But if you look on the intraday of that same time period, there's periods of time in the hourly where you get these sort of pauses and shelves, and those are really great places to kind of potentially jockey your way into these power. I call them power trends, or Dr. Schaap called them power trends. It's just
Hmm.
when it's almost like an out of control train. You're just trying to find a place to get in, and a lot of times these kind of pause areas on the weekly are really great areas to kind of jump on a train that's fastly in motion.
Yeah. Yeah. I think for me those could be also like good ad areas if I'm already in
Oh
it,
yeah.
or an alternative entry if I missed something. Some yeah.
Well, that's a really great point. That's a really great way to kind of add to your bottom line is when you find, because these sort of moves don't happen all the time, but if you find one of these and you add to it smartly on the way up, like you can have a decent sized position that runs 30, 40, 50, 100%, and like you have a decent portion of your capital in it, and those sort of trades can make a huge difference in your returns, even though they don't happen as often as you would want.
Yeah. Yeah.
Well, I do have to go here in a few
Yeah, that's
minutes.
an interesting one.
I have home obligations. I got to
Sure.
drop my kid off at the bus, and I got to get to work and stuff. But this has been a very fascinating discussion with you. I'm glad you were able to take the time today and talk with me. I really
No,
enjoy
thanks a
this sort of
lot.
format, this kind of one-on-one Q&A. I really enjoy this sort of unscripted, let's just talk about what's on your mind sort of thing.
Yeah, it was great. Thank you very much. For me, it's an honor to be able to talk with such an experienced trader and a great learning experience. So thank you.
Yeah, Facundo, thank you for your time. And, for the traders out there listening, I hope this conversation helps you with your own trading. Thanks, and I'll talk to you guys soon.